What is up, everybody? So I got a bunch of questions from you guys. We're going to talk about order flow. We're going to talk about algos and all sorts of shit. I'm going to go through a bunch of questions from you guys, and then I'm going to give you answers. I'm getting so many questions that it is going to be good to do these videos every now and then. I've done them in the past. But since the channel is growing in popularity, which we're at 9,000 subs now, guys. Woo! Yeah! I'd love to get to 10,000 subs. I have no idea what YouTube gives me. Probably not shit. I think they give you a congratulation email with some fucking confetti gif in the background or some bullshit. While that's not that fucking great, I sure as a fuck would love a congratulation email. So if you've not subbed to the channel, do it, because this fucking channel is different. It's awesome. It's a good fucking time. Come on now. Like the video as well. Now, first off, I want to go ahead and get into coffee. So in some of my last videos, I asked if you guys could donate to my coffee because the ad revenue through YouTube sucks. And you guys actually did. And thank you so much. I appreciate the gratitude. Because, you know, one video might make a couple of bucks. And when you guys donate a minimum of $3, because that's what it is, I don't know why. I mean, you basically doubled what that video is worth. So I appreciate it. I got some comments through coffee. I'm going to start reading those off as they pile up. So there is a link in the description to the coffee. So we're going to do that first, and then we'll get into other questions and answers. And there might be questions in this. I don't even know, to be honest with you. So thanks for the outstanding training videos, Andrew Taft. Thank you, sir, for the love. We got, I love you in a totally non-sexual mentor-like relationship that revolves around the mutual satisfaction of achieving perfect entries and exits. Thank you so much. Say hi to your mom. Silverado, you don't know how much your videos help us who are new to training and want to learn the right way. Thank you. I'm even buying you two coffees. Thank you, sir. I appreciate that. Silverado, HVAC trader. Thank you. Truly appreciate the content. Thank you for that $20. Alexandra, I've been talking to you as well. Thank you for the donation. Santa, I know you. You know me. Thank you for all the great content, FC. I appreciate that, man. Seriously. Toms, thanks, Kat, for the great info you share. Slim, this, I believe, might be my mentoring student. No words can describe how thankful I am for the opportunity you have given me and the knowledge. How did you do $5? I thought it goes in multiples of 3. Whatever. Maybe things have changed. No words can describe how thankful I am for the opportunity you have given me and the knowledge you share with myself and the others. I know this is nothing but one day. And I just want to let you guys know Slim is doing pretty good. I've got to do an interview with him to update you guys on the coaching with him. But he's been plugging away and he seems to really be doing well. Faux Peasy, sup to you as well. Matthew, love you and everything you post, Fat Cat. I'm the guy you kicked out of Discord, LOL. Hope you can forgive me. Ah, fuck, I feel bad. I remember you. Fuck. Ah, shit, man. Send me a DM. I'll let you back in. That Matthew is a kid. Dealing with teenagers can be tough at times, so I apologize, Matthew. Send me a DM. I'll get you back in. God damn, man. You put me on the spot. I didn't even read these beforehand. Thanks for the videos, Jay Parrish. Carlos, love your videos, Kat, and the Discord. Your efforts so valuable. Thanks. Guys, there is a link to my Discord. I don't ever really advertise it, but if you'd like to join, it is in there. Vincent says, thank you for all you do. It's been very helpful. Keep up the good work. Thank you guys for the donations. I appreciate that. With how much you guys have donated, I mean, that does help compensate for the YouTube ad rev. So I want to get into some other questions. Let's go ahead and start with this one I got on Discord, actually, from somebody named Roaring Kitty. I don't think this is the guy who pulled off the GameStop scandal. He said, hey, I just have another question that has been bugging me for a while. Do you ever think that as more and more funds are transitioning into quant-type strategies, and many prop firms have started hiring quantitative traders too, do you think that discretionary trading will become more and more difficult in the future because of this? So, no, I'm going to continue reading this. Will there ever be a time when it won't be possible to create edge using order flow or any other discretionary trading approach? So I know this channel is pretty dominant when it comes to order flow. Order flow itself is an edge. Order flow is not edge. The setups that I'm trading based off of narrative and context. And by the way, guys, watch the Art of the Trade video. I talk about how I set up videos. And then I also have another video on journaling where I break down a setup. Okay, so go check those out if you haven't. Order flow is really a minuscule component to my trading and where the edge comes from. Okay, so the setups with edge are what matters the most. Without setups that have statistical edge, and this can be patterns, this can be some sort of pattern in price action, it can be some big context, like narrative piece, like, you know, let's say we're trading a volume profile and we're about to mean revert it. That could be a setup, okay? Or we're hitting the value, the edge of value on a profile, and we think it's going to fade out. You know, that's an example of a setup or a channel on price action, right? I like channels. I like seeing channels break down. Looking at trend lines, shit like that can be setups. But again, in that video, Art of the Trade, I do talk about, I have a flow chart in there, how setups are constructed. So just simply trading one thing isn't enough, and then building narrative and the context, that's also important. So order flow in itself isn't edge, but order flow, because we're going to be talking a lot about order flow in this specific video. You're going to have more edge than somebody that is simply not looking at it. Now, I got to say that thinner markets like the NASDAQ, right? That market is super thin. Reading the order flow in that is practically impossible because it's so thin and it moves so quickly that it's almost... Now, while I think executing on a DOM is really good, like I think executing on like a DOM as a tool for execution, I think is necessary to be quick and to be able to move and bob and weave, getting in and out of trades. But to actually read the time and sales and the resting limit orders in NASDAQ, it's really not that fucking great because of just how thin it is. So I would say that's one market where you're just kind of looking at the momentum of trades and the actual price bars and how they're moving and shit. Whereas the ES, the order flow, is keying you off to certain things. I've tried to read order flow in other markets like crude, and I struggled substantially. So as far as the ES goes, which is something I specialize in, this is the only market I trade. Yes, there is something to order flow in that. But is it edge? I would say without it, I wouldn't be able to trade the way I do. It's got to be there. So I would say, yes, there is edge in it, but order flow alone is not edge. Learning to read it, to understand it, to feel it, and then working it into a setup that does have edge, that's when they complement each other. And that's when I think order flow actually has edge. I think traders that do get in the order flow, and if you're just, you know, the order flow is newer for you, it can be abused and it can be problematic. But I definitely believe that when you're able to feel, like, order flow is more so of a feel thing. And I have another question on that, and I'm going to go I'm going to get more into the feel thing. But to answer that question, yes, I don't think it is edge because I'm able to see things other traders aren't. I'm able to see high amounts of absorption, or order flow can tip me off to condition shift. I do have a video on volume. Oops, not that. I do have a video on volume versus volatility. I think you guys should go check that video out because looking at order flow in this video can actually tip you off to what the conditions might look like. If the bids and offers are being pushed around on small lots, and if I see a big contract come in like 20 lots and it moves the market 3 ticks, no problem, then that's telling me the bids and offers are real weak. The market makers are hesitant. They keep pulling orders. So the market is very hesitant, and it will create a specific type of condition where I have to adjust my approach. Maybe the bids offers are reloading all the time and large contracts aren't moving it quite a bit. Well, that's going to tell me about the condition. Okay, this is a different type of condition than what I just explained. So my approach might be a little different. If I see a bunch of one lots machine gunning, which you'll see the time and sales, you'll see a bunch of one lots just zip through it really quickly. If I see that, that's telling me a larger trader is attempting to cut up orders or test something. And then I might see the bid that he's hitting start to reload aggressively. Sometimes it doesn't. Maybe he's seeing if there's an iceberg there. So that's all contextual information. And it's allowing me to build out a narrative, to build out a story. A lot of traders don't build out a story. You guys tend to look at one area and trade it. But all these other things that are happening around my trade are key. And there's a very solid video on that. The last video I did on expected value. Watch this fucking video, and I talk about the story. I talk about how expected value is shifting around trades and how I start to scale up size because of what's happening around the trade. So, yes, order flow is very important, at least in the ES, because you can use it, unlike the NQ, in my opinion. But edge, yes and no. Yes and no. So yes, in the sense that it helps build context. And yes, in the sense it can help with managing trades. No, in the sense that order flow alone is not edge. Setups with edge are edge. Order flow complements it. And then when you are proficient in reading order flow and you complement it with the setup with edge, then it makes that setup with edge a little more edgier, if you will. So as far as quants go, and this is often a concern, I don't know if this trader is a newer trader or not, but with more and more funds transitioning into quant type strategies, what you must understand is they're competing against each other, okay? They don't all call each other up on the phone and buy at the same time at the same price. All of these algos are competing with each other. In fact, there's a lot of retail traders who create their own algos that fucking compete with these quant firms. And this is just speculation, but I believe the edge in algorithmic trading is just being the fastest and having your system be able to read shit on a millisecond basis, like a chart on a millisecond basis. That's like high frequency trading, obviously, right? I believe there's a lot of edge in just being extremely fast because my trading style is pretty fast. I'm not HFT fast by any fucking means, but there's a lot of edge in me just being quick. And I often preach throughout this channel how important speed is. And this is why I suggest doing things like tick drills. Being able to execute very quickly has saved me from trades blowing out against me pretty quickly with minimal losses, scratches, or a small win. Okay? Being quick has allowed me to... I don't know why I just snapped my finger there. Being quick has allowed me to cut a trade before it comes against me, or pulling right before it rolls. So being quick does have a lot of edge. So you do have these HFT firms, but they're competing against each other. And I believe over time there will be more and more competition. So the more dominant HFT firms out there are going to have more and more of a difficult time as they compete with each other. But again, this is just speculation. Yes, you're right. It's going more and more automated. It makes sense. Then you also have retail traders who are programming algos as well. Now, what you have to understand about these quant firms is conditions do shift. And again, this is me speculating here because I don't fucking know. I don't work at these places or talk to anybody that works at them. But what you have to understand is these programs, these HFT programs, which are essentially algos, have to constantly be maintained. That's why these quants are getting paid a salary or whatever they're getting paid. Maybe a cut of the money coming through. Who knows? But there's a reason they don't just build it and then leave. They constantly have to maintain it because conditions are constantly shifting throughout the market. Year after year is a different market environment. 22 is a lot different than 20 and 21. 20 was a lot different than 19, 18, 17, 16. And I started trading in 16. But those environments are different. So those quants have to constantly be tweaking the fucking shit, okay? Retail traders also make algos. And the interesting thing about retail traders is I understand there's a lot of you out there, and I've talked to and dealt with a lot of retail traders who've made algos, but they don't understand anything about trading from a discretionary place. I've heard in the past that quants have worked with professional discretionary traders to build out systems. And I thoroughly believe, again, speculation here, I believe, and this is also a bias, that you're going to have more success working with a discretionary trader as a quant to build out a system than trying to do it on your own. Because the problem with people who are building algos, especially retail traders, they often fail. Like I've dealt personally with a lot of people that have built automated systems and they all have failed. Now, there might be some guys that are having success, but I'm not 100% sure on it. But the several people I've dealt with that have done it have failed. I've also read and heard of other people failing with it because, again, it constantly has to be updated and tweaked. The traders that are not having success with building out an algo have not found consistency in discretionary-based trading yet. In fact, you can't just build an algo unless you've experienced some form of discretionary trading. If you know nothing about trading, but you're a wizard at building out an algo, what are you going to fucking do? Use a MACD or some shit and that's it? That's not going to work, right? You have to understand the market on a very intimate level before you can start to do that shit. And I think it's very important you find consistency in discretionary trading before you can do that. As far as my trading goes, it would be fucking very difficult to automate. Okay, now I'm not a programmer. I'm not some wizard with coding. I fucking can't do shit, okay? The most coding I've done is HTML on MySpace back in the fucking day. All my millennials, you fucking know. If you're my age. But to automate my trading would be very difficult because the program would have to really be considering a lot of fucking things. It would really need to be reading pace of tape. It would be need to read these bids offers. It would be needing to do so much fucking shit. And that's the thing. As a discretionary trader, I know how to make adjustments for certain conditions. I've developed intuition, which I would say once you become an experienced trader, intuition is fucking huge. New traders, you guys often think you have intuition, but you fucking don't. There's a point in time when you fucking do this long enough that there's this intuition that allows you to manage the trade a fuckload better. Like in the EV video, right? I don't think new traders are going to be able to calculate expected value shifts based off price action over time as well as somebody who's been doing it for many fucking years. Okay? Because I've watched the ES for 6 fucking years at this point. That, my God, I can't believe it's been this fucking long, man. Jesus Christ. I'm not even where I want to be in trading. And there's some of you guys is looking up to me and want to be like me and shit. It's like, I ain't even where I want to fucking be, but I get it. What the fuck was I talking about? Okay. Intuition, man. That's so huge to make these minute, nuanced adjustments based off of intuition, experience, and just seeing the shit, having thousands of fucking hours of screen time. That's just something a quant doesn't have, let alone a retail trader who's just now trying to program some shit, who's not reached consistency or had years and years of trading experience. So I think a lot of these quants, they're great mathematicians, but the ones being hired onto these firms have a fucking speed advantage. Okay, but there's going to be more and more of these firms competing with each other. And again, this is me just trying to predict shit. I ain't good at predicting shit, okay? All my trades are very small time frame shit that lasts a couple seconds, minutes, maybe an hour or two. That's it. That's all I can predict. And that's not even predicting. That's simply playing setups with edge. It's not even predicting. It's like playing something I know that has statistical edge and just doing it over and over and just managing it, okay? So it's not even about prediction. So I don't think discretionary trading will go away. And I don't, and the more of these fucking algos that are out there, the better, because they're all fucking fighting each other. They're all fighting each other. And you just have truckloads of retail traders that have programming experience, that are engineers who work from home that get into this to make extra money. I've noticed a lot of people that consume trading content are engineers who program shit, and they fucking failing at it. Don't get me wrong, there's people that will have success with it, but as conditions shift, the system might have problems. I just don't think there is any replacing raw discretionary fucking experience. I don't think so. If I had access to a team of programmers that could help me replicate my trading and we could somehow get a speed advantage to where it was faster than what I can do, then potentially, yes, that's when it would work. But that's because I have so much years of experience. You know what I'm saying? Guys, and I've tried to work with a programmer before, and that all fell apart. So please don't reach out to me wanting to take on this project. I got so much other shit to do before I'm willing to fucking do some automated shit. It would be cool to explore in the future. Not gonna lie. And that at that point, that's something you don't share with other traders. But yeah, so I just don't think discretionary trading will go away. More and more algos are competing with each other. And there's often times where I get into a trade and algos help me out. There's times where they go against me. So it's not a problem, in my opinion. It's not going to go away. And if you look at S&B Capital, their top traders are discretionary traders. However, they are using technology to help them. So they're what they call a hybrid trader. They're discretionary, but they use technology or whatever to help them. And I think there's a lot of edge in that. But obviously, years of discretionary trading is kind of what's helped them get to the top. So I don't think it's a problem. I don't think you should be scared. It's one thing if we were to play a game of chess and it's me against the computer, that's a problem. It's going to beat my fucking ass every time. But in a marketplace where there's hundreds of, thousands of different people, different machines trading on different time frames for different fucking reasons. Okay? And they're all trading in different directions. That's when the fucking machine ain't gonna win. Now, it's one thing if you're trading a Globex session as a scalper and there's no volatility and the volume is barely trickling in. I'll have to say at that point when the volatility and volume aren't there, that's when the machines are going to kick your ass. But when you go to sit down at the poker table, and this is an analogy I've gotten from John Grady of No BS Day Trading. When you sit at the poker table, you want to make sure you're sitting at a table that is a full table and there's a lot of people playing. I don't need to be better than some of these machines, but I need to be better than some of the other people that are sitting down at the fucking table, okay? And as a day trader, volume and volatility are they're key ingredients. You need volume and volatility. And even if that volume and volatility is mostly algos, it doesn't matter because there's more shit flowing in and it's just a lot fucking easier. And that's that's such a key ingredient. And that's why S&B Capital likes to play equities or stocks in play, something that has volume and volatility. There's a lot more opportunity with that. And I think if you're sitting in a very dog shit dead market that is barely moving with massive spreads, the algos are going to eat you alive at that point. But that's because it's like you playing against a computer in a game of chess. Whereas if we're playing a game of chess that has multiple players on both sides of the boards and we're all playing at exactly the same time and moving the pieces at the same time and not waiting for each other's turns, it's just too much that they're competing with each other. So, and I think as more and more algos have come into the industry, it's made them less dominant, if you will. Again, if the volume and volatility are there. So hopefully that answers that question. Let's get into the next question. Okay, somebody asked me on YouTube, hello, I'm currently watching the time and sales. Can you explain to me when somebody hits a huge amount of ass trade and it showed on time and sales and the price reaction is going above instead of down? Okay, so you're talking about a sell. So an ask is the limit order on the DOM. So let me actually pull something up. Okay, so just to clear things up, this is going to be the ask right here. So this isn't an ask. On the time and sales. These red numbers are not, those are sell orders, okay? So this is an ask or an offer, okay? Whereas the blue column is the bid, okay? So just keep that in mind. So when we say ask or offer, it's referring to resting limit orders. And this is the bid here. We have buy market or sell market over here, okay? So you're asking, and I don't know if I'm going to have an example of that. This is from today's session. Let me see if I can find one real quick. Okay, unfortunately, I don't have a prime example. So there could be several things that are happening. So let's look for a large amount of orders coming. Okay, so what you're going to see here is there's a large amount of sell orders coming in right here. Right? But what you also have to understand is when those large orders come in, this bid might start reloading, okay? And if we don't have a bunch of other sell orders coming in, at least on the retail side, like a bunch of little one lots and shit, then that's going to stop that big order in its track, okay? But also there could be something like just this 12 lot. This offer could be weak. So let's see if there's a prime example of that. So they're still selling, and you're getting good retail selling as well. And the market is driving down. You got a bunch of bigger sell orders coming in. You have a 51 and a 77 lot that just hit. But look at the offer right here. It's only 19. Okay? And there's a 2 lot that traded at this 42. So that gets hit. Okay? A 3 lot has traded there. A 5 lot, it has pumped up. 47 lot hit. So obviously bigger bids came in and swept it out right there. Sometimes a tape might be going so quickly that you're not catching these little things, right? You would think, oh, they sold 77 at 74 and they sold 51 at 73, 75. Why is the market not dropping in? Well, let's look at it again. Right? Bunch of retail trades come in. There's your big orders. Okay? They're still selling. Right? And then you have a 10 lot come in at 74. Well, guess what? Unfortunately, the cursor is in the way here. But right at 20. There's only 20 lots here. That gets cleared. You have a 10 lot, a 1 lot, and an 8 lot that came in. So 8 plus 1 is 9. 9 plus 10 is 19. So that 20 that was sitting there just got cleared. And what you're not seeing is a retail traders came in and cleared it up. Okay? And there was only that 20 lot. When these sellers were hitting, there might have been a little bit of reloading. And what needs to happen in this specific area is there needs to be constant selling. Just because somebody hit the 77 lots and the 51 lots, fucking Tarukin, man. Just because somebody hit these larger lots down here doesn't mean shit, because what you need is you need sellers to keep selling. Yeah, you hit big sell lots. Oh, well, if nobody's going to continue to sell, it's not going to continue to drop in. Okay? Clearly, they're hitting a zone that seems like it was somewhat reloading a little bit, right? So let's watch it here. You have 66 and 75. Boom. They bang it, and it does drop in really quickly, several ticks, right? Because a bunch of sell orders came in. But the offer could be weak. And if all of these offers are weak, okay, and there's not much on the offer, then it's going to not take as many orders to push it back up. And that's what we're seeing here when this 10 lot buys, right? And right here, and then there's no more selling. We're not seeing any more selling. And then a bunch of buy orders come in. And then it goes right back where it was. So they dropped the large orders here. It came down 4 ticks. And then it goes right back up. In my opinion, it's because the offers are weak and the sellers are not maintaining pressure. That's a lot of shit to keep track of. So that's something you can keep in mind. Why is that happening? It's because the offers are weak. So there you go. A bunch of buyers can't come in, right? We have a bunch of buy orders hitting. Now, they're not the biggest buy orders right here. Okay, then it clicks up. You have 36 lot here. Stalls. We're not seeing any more buyers. A couple more buyers right here, but they're real small. Now we have bigger sellers hitting. This offer might start reloading. We don't know, but it's 21 against 42, so it's not going to take as much to drop it back in. A 12 lot hits, and then it looks to me, then we got a 13 lot hit, and a couple other sells, and that bid was slightly weaker. Let's go back a little bit. So let's look at this bid. It's boom, it gets cleared out. So what did that get cleared out on? I believe that there was a 30 lot sell that came in. 30 lot sell. Nope. A 13 and a 1 came in, and it's at 65. What was it at before? Hold on, we'll take a look right here. So it's at 51, right? 51 lots by 30, 65. So a bunch of bid actually just pulled off. Let's do some math. So we have 51 lots sitting there, okay? By 30. okay? And then it goes 65. So let's look at that one more time. So we had 51 lots that traded up here. Now it's 65, okay? 65, what did I say? Minus 51, okay? That's 14 lots. So it was advertising 30 lots. And then what happened right up there, so we had 30 lots originally. So 30 minus 30, god damn it. 30 minus 14, 16 lots pulled. And it happened so quick, you didn't fucking catch that. So what's happening is you're seeing large traders hit, but the offer or the bid behind those large buyers or sellers might be weak, and it might start pulling. And the pulling happens all the fucking time, okay? So that's what's happening. And you're not... It's going to take less orders to go the other way than it will to continue the move. So just because you see large sellers and then it goes up, well, they need to keep maintaining their pressure on the tape, but they need to continue to maintain their pressure at a high pace because the bids are firmer, the bids are bigger, the bids are reloading. And if they're just because a big sell order came in doesn't mean shit, right? Once that order's in, it's in. You need to continue to have selling for the market to continue to push. And the offers behind all those sellers could be super weak. So it takes barely jack shit to move it back up. And that's what's most likely happening. So, you know. Okay, so let's get into the next question. This is also on YouTube. First of all, I love all your videos. Extremely helpful in understanding the market. I'm going through the new traders playlist. In case you guys don't know, there is a playlist where I compiled all the videos I think you guys should watch if you're brand new. That playlist probably should be updated. It's going to be a pain in the ass. Probably not going to do it, to be honest with you. So just continue to watch videos as they come out. I recommend watch all the videos because they're all good videos. My fucking nose itches like hell. There's like one of those boogers, you know, every time you breathe in, it starts to flap and it tickles me. So sorry, I need to dig this motherfucker out, you know? So I'm not going to eat it on camera either. I'm beyond that. Too old for that. But if the camera was off, different story. I'm just kidding. I'm being gross. I'm a gross motherfucker. All right. It's for the entertainment. Anyways, the question is, having looked through all your videos, did you look through all the videos? What setups do you still look to trade? Again, Art of the Trade video. Watch the expected value trade video because I'm breaking down setup in that. And this is more recent. And then watch the playbook trade video, which is also very recent. And I break a trade down in that. Those three videos together, I think, are really the pinnacle of understanding my trading a lot better. Go watch those videos, okay? Because the setups require a fuckload of... Now, there's more nuanced setups and shit. And in the Art of the Trade video, I do talk about slips, reclaims, completes, micro ranging, mean reverts, all that shit. I do explain some of that in there. And I do explain some of these concepts briefly in the other two videos I did mention. But in order for me to really share and teach setups, that will be paid content sometime in the future. Don't ask me when, okay? But there's a lot of context and narrative behind setups. It's simply not this simple little, oh, there it is. It's not this cookie cutter black and white. Do this when this happens type shit. Okay, so I recommend watching those three videos. I understand not all setups will work in all markets because markets change, but something, at least an outline to start, would be extremely helpful. And those three videos I mentioned are the ones you should go watch. Thanks again, Fat Cat. Once again, your videos are always on point. Appreciate it. Let's get into the next question. Somebody asked me, I'm trying to learn to read tape and DOM, but I'm having trouble. Tape is starting to make a lot of more sense. But with the DOM, I have no idea what I'm looking for. Doing tick drills, and it just looks like a bunch of numbers. For the tape, I get that it's more leaning about the speed of it. Yes, pacing of tape is very important. So how fast is the tape coming in? And again, in the volume versus volatility video, I explain pacing of tape and how important it is. And also in that video, if you've not watched it, I do also talk about how you can look at the limit orders, and depending if they're pulling or not, that'll gauge how volatile the market is going to get. So that is kind of where limit orders have their place. Assuming you're looking at the ES. If you're looking at the NQ, I don't know what to fucking tell you. But if you're looking at the ES, the bid offers, depending on how they're actually reacting with the way the tape is hitting them, tells you a story. It is a two-way relationship. You need to look at the market orders. You need to look at your limit orders. And together, the way they ebb and flow with each other will tell you what kind of conditions they were in. It'll tell you if the market is concerned about something, if there's confusion. It can tell you a lot of things, but also executing on the DOM is extremely imperative to being quick, assuming when you're doing the tick drills. I do have a video on stop you doing tick drills wrong. If you haven't watched that, you should probably watch that to really understand what you're doing in the tick drills, because I do find that a lot of new traders start to do the tick drills wrong. Not sure if you're doing that or not, but you should probably check out that video if you've not seen it, because it explains exactly what the point of a tick drill is, okay? But he says, let me continue to read this. For the tape, I get that it's more leaning about the speed of it and how prices react to it. But looking at the DOM, he said dog. But looking at the DOM most I do is just think, oh, there's more bids than offers, so it should go up. But I don't even feel like that's right. Any help would be much appreciated. Now, just because, okay, so I do have a video on strike zoning, and it does talk about, if I'm not mistaken, this is an older video, but it's definitely worth a watch. Also, you guys, just want to put this out there. Guys, when you go to my channel and you click on the videos tab, not all the videos are under the video tab. It ends there. So it seems like a bunch of shit is missing. You must go to the live tab. A lot of my older videos are in there. Go to the live tab. This strike zoning, the spread video, I think is extremely important to watch. In the strike zoning video, I talk about the market orders hitting the center of the DOM. Actually, I think I can kind of give you an example. Okay, guys, so what we're going to do is we're going to look at just a trade entry. I don't remember if this is a good trade or what the fuck happens. But again, in the strike zoning, the spread video, you need to check that out. It tells you why the DOM is set up the way it is and how things need to be efficient and where your eyeballs should be looking. And I talk about cone of vision. I just cannot recommend this video enough. This is one of those videos that I would say is up there as a Fat Cat classic that should be watched, as well as the expected value fucking video. That one's fucking solid, boys and ladies. I know there's a lady that watches this, like 2 of you or some shit. But what was I doing? Oh, yes. So here's the thing. If I see a large bid or a large offer that is not the average size, I don't like that. That's a problem because the market's going to want to go to that. Here's the thing. The book or the limit orders are a lot thinner than they used to be. There used to be like 300 lots per bid offer. It's a lot thinner. And this COVID broke it for whatever fucking reason. So there's not enough liquidity because your bid offer, your offer and your bid right here are liquidity. There's not that much liquidity. So now large traders have to cut up size. Nowadays, when you see a larger than average bid or offer come in on that DOM, a lot of the time the market wants to go to that because that's liquidity. So let's say I sell, but then a large offer comes behind me. In the old days, I would be like, yeah, that's fucking great. The market's going to push away from that. I have great defense behind me. Fuck no. I might want to get out because that's a lot of liquidity, and buyers are like, oh shit. Instead of cutting up a bunch of orders, I can submit larger market orders and then get filled. So when I'm seeing larger than average bid offer sizes, I'm very skeptical and don't want to trade around those. So that's just something I like. Now, that's not always the case. If I got short and then this 74.50 gets real big and say it goes to 300 or 265, well, that's good. That might pull the market down. But the problem is if it starts reloading and absorbing a lot. So when you see large bid offers, they can mean so many different things. How are your market orders reacting with that shit? And that's what it is. Now, I think paying attention to market orders is very imperative, more important than, well, I wouldn't say more important, but it's very important to look at your market orders when you're getting into a trade, especially on these inside columns, okay? Because the inside columns are going to offer you things that your tape ain't going to show you, and this is very key to managing a trade, and I have mentioned this in past videos, and we'll mention it again. Okay, so what you're going to see here is you're going to see me get up, look at that large offer right there. Notice how there's a large offer behind me. That might pull the trade back in because this is liquidity. Boom, it gets hit. Nobody wants to trade that. Only a one lot comes in, right? So we only got a one lot that comes in. So I use that large offer to pull the trade back in. And there's other things that I'm leveraging as well. Hopefully you guys can see this. Yeah, you guys can see it. Okay, so now I'm in the trade. Now what I do is I clear the inside columns out manually by hand because I constantly get asked that question. And I aggressively am cutting it. So there you go. Reset. What do I want to see here? It goes 2 by 14. Okay. 10 by 27. Then we get a bunch of orders that dump in here really fast. So what this is telling me, in this moment in time, sellers are willing to push hard. Buyers started pushing back. That's not good. Clear it. Now again, all those orders that came in are old. They're old. To answer the other guy's question about why does the market go backwards when a large order comes in, well, I need to keep seeing the pressure. So I'm looking for the pressure here. Okay, this is coming in. This is reloading. Then it pops up on a 50 lot. Then it dumps in. Now they're hitting 11. That gives me confidence to hold the trade. Then they hit. There's large liquidity. Pulls the market in. 26 lot hits it. Doesn't pull. Still 97. Gets hit. Gets swept hard. Not good. The market is going up. Okay, we clear everything. I need to see aggressive numbers hitting this square. I need to see aggressive numbers hitting these squares. Ideally, I'd like these 4 squares to get filled. Mostly these 2 on the left. Okay, that's the strike zone. Nothing. Nobody's hitting. Nobody's hitting. And they're hitting up here. This is slowly getting hit. Clear it. Now they're hitting up there. They ain't hitting down. Their trade's probably going to go against me. They're hitting down. We need to get the fuck out of it. And then we get out we go for it too fucking late. Slightly too fucking late. Notice how I got bumped up to 10 fucking Q. I was that much slow by just a fraction of a fucking second. And this is why speed is so imperative in trading. Right? Maybe I can get the fucking break even. There we go. Otherwise, I'm going to have to start manage it on the fucking upside. And there you go. So yes, the trade can continue to go down or whatever. But in the context and narrative of this specific fucking setup, This motherfucker needs to work, and it needs to work right away. And if it don't work right away and it starts coming against me, or if it works a little bit, that's expected value shift. I must exit the trade. If this was a different setup with a different set of narrative, with a different set of context, then I might be more inclined to actually holding the fucking trade and letting it go against me a little bit. Whereas in the grand scheme of things, this specific trade is not to be held. It must work right away. This is a momentum trade, and it did work. It did work right away initially, but then things started to go against me. So those market orders on the middle columns are so imperative. Yes, the tape and shit is great. There's a reason the tape is there. It's all explained in the strike zone video. Go fucking watch it, and that's under the live tab. I'm not going to explain it here, but that is what is happening. So, yes, the limit orders do matter, but how are they reacting? If I notice that there's a bunch of large orders on the tape hitting and that tape is going fast, that tape is screaming, it's like, ah! Because it's coming in so fast, and that bid and on the DOM, the price isn't dropping, that is absorption. I don't need any other tool to tell me that is absorption. And I can watch the little square right here and watch these numbers come in super fucking fast because, again, the tape is screaming. It's going, ah! And the fucking price ain't dropping. That's reloading. There's an iceberg there. And if that tape pressure is easing up, we got a problem. So in order to fucking read that bid offer, you don't have enough fucking experience. Are you recording and reviewing your sessions like I fucking do with every single one of my sessions? Been doing it for fucking ages. I've practically been doing it for 5 fucking years at this point. Okay? You want to know how I got better at reading order flow? Record, review. Okay? You want to know how to get confident in trading? Experience. If you want to get confident in anything, it is from experience. I can feed you a bunch of shit, pep talk you. I can brainwash you, put you in a state of hypnosis, whatever, to make you think you're confident, but you ain't confident. Confidence in any high-skilled job, such as trading, because this is a high-skilled profession, comes from experience. Whether you're going to be a pro athlete, like an MMA fighter, or a professional footballer, whatever the fuck it is, confidence comes from experience. Experience comes from recording, reviewing, and staring at your sessions. Yes, reading the order flow is a foreign language, and I simply can only give you little snippets of shit. Yes, that might be helpful and shit, but in the end, you need to record, review your sessions, okay? You got to just simply stare at this shit until it starts to make sense. Because most of the time, it ain't going to make sense. And if you keep staring at it, what'll happen is there'll be these brief moments in time where it does make sense. And then most of the time, it don't. Then it starts to make a little more sense, but then it doesn't. Over time, it's going to continue to make more and more and more and more sense. Hell, there's times I'm looking at the order flow and it doesn't make any fucking sense. So at that point, I have to shift my approach. Especially in low volatility environments where there's no volume, none of it makes sense. It doesn't even matter because the volatility isn't there. So, you know, the fucking algos are going to eat you. So you just got to keep looking at it. You got to know when to engage and when to disengage. That techniques I was showing you where I'm looking at the center columns, if the volatility is so fucking high, that technique doesn't even fucking work anymore, and it doesn't even really fucking matter. Yes, I still want to look at this stuff, but I want to be a little looser with it. Because there's certain and that's the thing, you need to gain experience to know when shit works, when shit doesn't work, learn how to use different techniques in different environments, and when you're able to adjust almost automatically to different environments and know exactly when to engage and when to disengage, and it's second nature, You can just do it without really thinking, right? Like, for instance, playing a video game, right? You got to learn the buttons, and at first you're like, ugh! And then over time it becomes second nature, and you can just play the game, right? Same thing with your trading tools, okay? Once you're able to do all this second nature and know when to engage, disengage, when to adjust techniques, then you become confident, and then that's when it makes sense. But you just got to keep staring at it. You need experience. You're not shortcutting it. So keep fucking staring at it. I know it's a foreign language, but I'm telling you, if you just keep reviewing the fucking sessions, that's all what you got to do. There ain't no shortcutting that, especially when it comes to order flow. There is no shortcutting it, and this is why a lot of people give up on the shit. And don't sleep on your bid offers. Do not sleep on your bid offers. I'm glad you're finding the tape being useful, but learn how the tape and the DOM are in a relationship with each other, and how the tape and market orders can tell you what the conditions might be for the session, which can tell you how to make adjustments, or it can tell you how to manage trades. So don't sleep on it. But I'm more so really focused on, and that's a lot of information to process too. And in order to process that amount of information that quickly to make split-second decisions requires it to be second nature. And the way things become second nature is through experience. Guys, I hope this video was extremely fucking helpful. Please feel free to donate to my coffee. I really appreciate the love you guys gave me. A call to action actually fucking worked. So please go do that. If you enjoy the content, you're really supporting the channel. You're making this shit worth it, because I've spent over an hour filming. I spent 30 minutes setting up the lights and the mics in the studio. And then I'm going to probably spend an hour and a half editing it and time stamping it, because I really try to do well with my timestamps. And I'm going to spend another fucking 30 minutes to an hour on a thumbnail, and then all that other bullshit that comes with it. And these videos simply don't make shit. They can make like $3, $4, $5 in a month. And when you guys donate a minimum of $3, you doubled what this fucking video is making me through YouTube. So I appreciate those that donate shit. I'm going to do more call outs with the coffee. So if you guys have questions or something, that might be a great place to ask me. And I did have somebody, and let me go read that. Somebody said, please stay as a trader, because the majority of those who make content on YouTube are not traders. They are just YouTubers. We appreciate your efforts, Fat Cat. Well, guess what? I'm both. I can do both. And I do want to... This channel is not like other channels, and I'm here to do things different. It's always been different. I'm forging a different path. I don't give a fuck about what other people are doing. I don't care about competition or whatever. Okay? But I'm here to do both. I enjoy content creation. I enjoy talking to you guys. I enjoy sharing this stuff because it makes me a better trader. Obviously, trading always comes first. And when I have the time to do videos, I will do videos. That's why my uploads are not consistent. That's why I don't crank out a video every fucking day. But I'm trying to get better at it. It is a lot of fucking work, and there's a lot of stuff going on. So there will be more periods in the future where you may not see but 1-2 videos in a month. So they are very inconsistent because trading and other things come first. But again, please like, subscribe the video. I will see you in the next one.